And in business news, the recent reduction in price of petrol by the Nigerian National Petroleum Company Limited and, of course, Dangote Refinery to below 900 naira per litre has been attributed to declining global oil prices and stability in the naira. An energy analyst and lawyer, Dr. Ayodele, says prices of petroleum products will continue to reduce in coming days due to the ups and downs in the oil and gas market and, of course, local refineries being operational in the country.
You would see that, for example, when Dangote's refinery came on stream, diesel prices between that period and now have dropped by about 38%. And also PMS from around 975 at some point is about 899 now, right? So it's always positive. Yes, it's not just about the refineries. It's also the fact that the naira has improved. It's also the fact that crude oil prices have dropped. So I've always said it before now that we're hewers of wood and drawers of water. When you do not add value to your base resource, you get very minimal profitability. But if you can add value, take it from cocoa, for example, to chocolate, you make much more. You even control the value chain. If you can do from crude to petroleum products, you make much more, create more jobs, improve the strength of your currency, balance of trade, and balance of payment.
Meanwhile, stakeholders are calling on the federal government to adopt prudent policy measures and create a business environment that promotes non-oil export growth and competitiveness. CEO 3T Impact Consulting, Dr. Bamidele Ayemibo, says there is need for businesses to double their investment in the non-oil sector to boost Nigeria's export trade.
Nigerian businesses that are the big guys that are pulling the number, they have a challenge. Many of them are getting to their peak, and they are not doing a lot of new investment to increase the number of export or the volume of export. So maybe they do $1 million or $1.2 million or $1 or $5 million, and that's what they've done. If you check their data in the last 2-3 years, that's all they've done. Now, the implication of that is that if you don't get new people coming in, new businesses coming in, we are not likely going to grow the non-oil export volume. So that's why government must have a very, very direct and deliberate policy to increase the number of exporters in Nigeria. In fact, I strongly believe if government take that up and we're able to increase the number of exporters in Nigeria, it's going to help us a great deal to push up those numbers. But to be able to do that, there must be a deliberate policy on preparing SME for export, particularly SME that is adding value.
Well, the stock market has indicated that New Year trades may increase the weight of wealth for many investors. Following sustained gains, the market index closed trade upwards at 0.39%, underscoring the gaining streak in the beginning of the market. The biggest trade gainers was C&R Leasing firm as it made its early half of percentage points. The rest of gainers were Cornerstone Insurance, Dangote Sugar, Quartix, and Deep Capital. The losers included O&O, Computer Warehouse Group, Sunu Assurance, ABC Transport, and Academy Press. And outside our shores, Asian stocks rose today, aiming to shrug off a lackluster start to 2025, while the dollar was steady near a 2-year high against the basket of currencies, as investors fret about the U.S. rate staying higher for longer. MSCI's broadest index of Asian Pacific shares outside of Japan was 0.38% higher, with South Korean shares leading the charge. Chinese stocks struggled to bounce back after plunging on Thursday, highlighting growing worries about China's economy and a possible trade war when Donald Trump begins his U.S. presidency later this month. China's blue chip CSR 300 index was 0.2% lower, on course for its biggest weekly drop in almost a year. Hong Kong Hang Seng index rose 0.58%. European stock markets were set for a subdued open, with Euro Stock 50 features 0.14% lower. German DAX features and FTSE features little changed. On Wall Street, U.S. stocks closed broadly lower on Thursday after initial gains failed to hold. Shares of Tesla shrank about 6.1% – 'after reporting its first annual drop in deliveries. U.S. President Joe Biden has formally blocked the takeover of U.S. Steels by a Japanese company, saying foreign ownership could pose risk to national security. Mr. Biden's decision comes a year after the Nippon Steel firm announced a $14.9 billion deal, describing it as a lifeline for its smaller Pennsylvania-based rival. In his statement announcing the new development, President Biden cited the strategic need to protect domestic industry, disclosing that the acquisition would have placed one of America's largest steel producer under foreign control and create risk for national security and other critical supply chains. The U.S. Steel and Nippon Steel did not immediately respond to the request for comments, as shares of U.S. Steel dropped by 7% in New York. U.S. electric vehicle maker Tesla says its China sales rose 8.8% to a record high of more than 657,000 cars in 2024, a strong performance in a competitive market in a year when annual global deliveries fell for the first time. According to Tesla China, the automaker sales in the world's largest auto market also increased 12.8% in December, for a month earlier to a record high of 83,000 units. In 2024, Tesla delivered 36.7% of its cars to customers in China, its second largest market based on sales figures, but global deliveries nonetheless lead 1.1%, missing Mr. Elon Musk's earlier prediction of slight growth. Meanwhile, Tesla sales declined in 2024 for the first time in more than a decade, as demand flattered and rival gained pace. The company delivered almost 1.79 million cars last year, down about 1% from 1.8 million in 2023.